Good morning and welcome to the Alpha Pension Group Retirement Recap for Monday, April 6th. We have with us today Rob Milas, our Chief Investment Officer, Jennifer Sahardi, our Director of Education, and Mark Salamoni, our Lead Consultant. I'm going to turn it over to Rob to talk about the markets. The futures look very promising. So Rob, tell us what we have in store today and what happened last week.
Yeah, so last week, closed out Friday, a down week, a down day as the March jobless reports came in weaker than expected. And then overseas, we are starting to see the impact of the coronavirus on the economy as the Purchasers Managers Index came in extremely weak. So we're starting to see the impact now.
Thanks, Rob. I appreciate that. I know the futures look very strong today, so hopefully we'll have a nice day in the markets. Mark, you stumbled upon a really neat article in the Wall Street Journal about loans, mortgages. So tell us what that's about. That's very intriguing.
As participants and Americans are waiting for those stimulus checks, everybody's wondering how to pay the bills they have and trying to look for ways to adjust their budgets. Well, while reading the Wall Street Journal, I came across an article that talks about how people with federally backed loans can suspend their mortgage payments. So it's not a forgiveness, but it is a suspension of those payments. And if your loan is federally backed, you can apply for this and you can work with your lender to try to get a period of time where you don't have to pay the mortgage. Now, the mortgage, like I said, it's not a forgiveness. This mortgage would accrue interest. And at the end of the forbearance, you would owe the interest. And it would just be really kind of extending the maturity date of the loan. You'd have to work with the mortgage company on how to figure that out. From the article that I read in the Wall Street Journal, it does talk about how there are long wait times on phone lines for this. So if you do work with a federally backed mortgage, you do have options, and it's something you can look into. But you want to carefully make sure that you're not putting yourself in a worse situation after the forbearance ends, and you just want to understand how it all works. Another item to consider is the credit score. From the article's reference, the credit score is typically not affected, but it's something you want to continue to watch. So a lot to consider, but an option for people to use if they need to.
All right, Mark, thanks so much. And when reading that article, I noticed that 70% of mortgages are actually backed by the federal government. So a lot of people have this option if they need it. And I like your perspective, which is only use it if you have to. This is not getting you out of your mortgage payment, of course. It's just deferring it and deferring it with interest. So you need to be careful there. Jennifer, I'm going to turn it over to you. You have some questions about how advisors can help their clients given the events that are happening, and putting me on the hot seat a little bit here today on a Monday morning. So welcome.
Thank you so much, Rich. Yeah, I was wondering about that. Right now, everyone is looking for their way to help, their way to give back among these uncertain times with all these changes of information. So what are you doing? What can advisors do to help people at a time like this?
That's a great question. I mean, generally, as consultants, as advisors, we do three things for our clients. We make sure the investments and the fees are appropriate. We make sure the education for the employees is going well. And we make sure that the companies are following the best fiduciary practices. So given all the events, there's so much going on. With the CARES Act, for an example, we're making sure our clients know exactly what it is. We're making sure they know how to implement some of the aspects of the CARES Act if that's what they want to do. Some of the record keepers are opting people in, some are opting them out. So what do you need to do, whether you want to adopt these aspects or not? Another part is, are the record keepers waiving the fees for some of these distributions and loans? So we're just talking through with our clients, what does this mean to their plan? What does it mean to their company? What does it mean for their plan participants and employees? Is it the best thing for them to do? And that's an individual discussion. The second thing we're doing is, with the assets going down so drastically, we're making sure that the fees don't increase on the record keeper side. And we're making sure that the investments, of course, are going through a process to ensure that they're doing as best as they can. So investments and fees is always part of what we do, but it couldn't be more important than what we're going through right now. And probably the most important thing that you can ask your advisor to do is to educate your employees. I know with you and your staff, you have webinars at least twice a week saying, here's what you need to know about the market. Here's what you need to consider before you make any changes. And just having someone there for your employees to talk to is probably the best thing that we can do during these unsettled times.
I really appreciate everything that you've been doing and everything that you've allowed us to do. I know we didn't normally offer webinars so often, and I think it's really great how we've been able to adapt and really help more participants. The feedback we've really gotten from participants has been great. And I'm glad to hear you're hearing that from plan sponsors too, because I think we can't save lives physically, but we can definitely make a difference in people's lives. Thank you, Rich.
Thank you. And thanks everybody for joining us here for Monday, April 6th. We'll see you tomorrow. Have a great Monday.